So let's take a minute and talk about paying kids and spouses. What kind of tax deductions can we look at with that kind of scenario?
The spouse is a different situation than a child. The spouse, you're required to pay them in wages and take Social Security out. But there's another little quirk that you can do as part of that. It's called Section 105, where you can deduct their medical expenses and your health insurance on your business returns. So that's kind of a cool part and part of what you can do to be able to garner more deductions. Now, the kid is another situation, which is another little quirk in the law is as long as they're under 18 years of age, you can pay that child for work, and you can pay them. What I have done with most of my clients is I've limited it to their standard deduction, because then there's no requirement to file an income tax return. I think the current standard deduction is $13,750, I believe. Now, the other piece you can do with this when you're paying your child is that child can now contribute to a Roth IRA and let that be put into a Roth IRA and grow. And in 5 years, they can pull that money out tax-free, the principal, and use it for college or for whatever they need. Now, once they reach age 18, there's a requirement that they have to pay self-employment tax or Social Security on those wages.
So let's talk about paying kids a little bit more. What about giving them commodities? Is that a possibility?
Absolutely. The commodity wages allows you to pay not only your kids, but your workers, anybody that's working for you in grain, hay, cattle. The key to make it effective is they have to be allowed to market their own grain. So they have to segregate it and market it and sell it when they want. You can't just take a load of grain to the elevator and say, okay, give $5,000 to my kid. But the neat part about the commodity wages is they're not subject to the self-employment tax. They're treated as a capital gain. So that you're avoiding that piece of it, and that might be an option to use for your kid who is over 18, so you can minimize the Social Security tax piece of it.